Monday, September 23rd. Quick one video for you wonderful ladies and gentlemen. Markets are holding gains. They are doing a little bit of treading water here. We do have the big PCE inflation read on Friday, but I think markets just moved a lot and there's been a little bit of consolidation, a little bit of sell the news post-Fed also. We saw that big ramp the following day, and I think markets are just digesting highs. VIX getting really close to some key support between 1548 and 1477. That's the 100 MA and 200 MA respectively. I do think it's a good opportunity to put on put protection for end of year rally aspirations. I do think if you're looking to play the short trade, we need to see the VIX up over at least 1936, and I have the alert over 1940 because that was the 918 spike high. As far as the futures go, consolidating above the Fed day range but below the 716 high. As long as the 918 Fed day high holds at 57.55.75, it's okay. Below there, I do think has a liquidation break potential for a move down to 57.33 half, and maybe even the Fed day low at 56.75 quarter. Often when you can't stay above the Fed day high, you rotate down to the Fed day low. We need to clear 57.85, and if they can do that, I think we're making a run up to 5,800 plus. Now it just looks like consolidation above the Fed day high and below the 716 high. Q's similar situation, although they're at the 612 Fed day high at 20,105. Bulls need to clear that and hold. If they can, I do think that they can fill up the pennant all the way to 20,203. If we can't hold here, I do think there is liquidation break down to at least the 200 MA 30-minute, which is currently 19,950 half, and potentially a move down to the 918 Fed day high at 19,900. The bulls can hold there, it's still all right. If that can't hold, we probably would see a larger liquidation break, maybe even to as much as 19,558, which is, of course, the Fed day low from 918. To me, it just looks like price is consolidating up here near highs and looking to push higher, but there is always liquidation break potential, particularly if the 10-year continues to rally. We're starting to see the front end of the curve drop off, but the long end of the curve starting to steepen. So the yield curve inversion is ending. Keep an eye on TLT. It is still technically one time framing. I'd on guard for a higher low tomorrow, and if we can get over 99.09 high of day, I do think there's some poppage up to 100. If we do keep pulling back, the 50 MA is 97. I'd start getting interested in reloading closer to from 93 half to 95 area. I do think that area will be some support if we do see a larger liquidation break in TLT. As far as SPY goes, consolidating nicely above the 565.16 reference high that we saw in 716. As long as that holds, I think it's fine. We had tested back there on Friday. If we do keep going, we could ride the rising wedge high and get a move back up to 574.55. Then I think it's a good opportunity to trim some profits. But if we do see a liquidation break that takes out the 565.16, I think we're probably coming down to at least the 10 MA at 562.05, the 20 MA at 558.13, and likely ultimately 553.41, because if we can't hold over the 100% retracement, we come down to the 78.6. As far as the Qs go, still holding the gap and go, which broke the downtrend on 919, but we haven't cleared that high. The bulls will need to clear 486.23. If they can do that, I think the world is their oyster up to 496.34, which is the 716 gap fill. Bulls could have a pullback to as much as 473.82 to 472.93 and still be okay. The semis have really not been leading, and I think that could be deleterious if it continues still in this symmetrical triangle. I think if you're long, you could use today's low of day at 237.12 as a stop. If that breaks, we probably come down to somewhere between 232s and 233s. If we can clear the 100 MA, and that is the must clear here, 243.24, I think we could make a move up to 251.52. But we have to see it clear first. Nvidia seemingly can't get itself arrested, but it is still holding the 100 MA, which is my must hold at 114.33. As long as that holds, it's fine to be long. Anything below there to me is problematic. And in this instance, I think the bulls really do need to clear those 118s to 119s. Apple, today there was maybe some problematic sales news. To me, it just looks like we have a double top at the lower high from 829 at 232.92. Technically today was a mini look above and fail with 233.09. We are pulling back. This 225.60-ish area needs to hold. If not, we could risk filling up the gap to 220.69, and then we'd see. I think Apple is just in a large consolidation pattern here. I don't think IV is high enough to do the iron condors or the strangles, but that's probably how I would play it, at least at the moment. I think it's probably going to play consolidation mode until the earnings, which are actually on Halloween, believe it or not. By the way, just anecdotally, I did get the new phone. It's right here, the 16 Pro. The only thing that is problematic for me was the transfer over was very janky and caused a lot of problems. I think that there's a lot of glitches in the new iOS. I'm hearing that from multiple people, and I do think that that could become problematic. I don't know if it's going to hurt their sales, but it could be an issue. We'll see if it gets fixed. Microsoft getting a decent pullback here. It's got to hold that cup and handle breakout zone from 426.97 to 430.82. So far, so good, but if it doesn't hold, careful. If it does hold, I do think we can continue sideways to higher. Bitcoin acting okay. We're seeing a little bit of topping tail action here. I did think we could make a move up to somewhere between 65,765 and 66,233, but we do have a few days of topping tails. I'd be a little cautious. We do have dragonfly dojis kind of looking on both the SPY and the Q, so I'd be a little careful with that too. Doesn't mean it has to resolve lower, but it doesn't necessarily mean we have to resolve higher, and of course always on guard for look above and fails. I think a low of day today at 62,430 is a good stop. Speaking of real gold as opposed to digital gold, we are now up to the channel high that I was looking for, 243.46. Pullbacks to 239.47 are okay. Pops to 248.36 plus are a sale, and I would be trimming up here. It doesn't look to me like there's material excess on the upside, but I think it is a harder chase here near channel high. Generally speaking, I think markets are consolidating gains. I think traders are reevaluating what they want to do in terms of putting on new money longs after a big run already. I think they're looking to see if the market can hold here. They're looking for breadth to improve. Generally, internals have not been that impressive, and we haven't been able to see the big cap tech names really break us up and out. If they do start selling off hard, there could be some rotation into other stuff, but if it comes down too hard, too fast, a lot of portfolios and ETFs have that, and that could just drag down the entire tape. I do think we need those big cap tech names to lead. That's it.